Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar was somewhat mixed after renewed downward pressure emerged on Monday, and with the key support level holding at 62.60-65, still expects to see further gains to the upside. Investors are increasingly concerned about the impact of Trump's policies, recession risks, and ongoing tariff issues. On Tuesday, Trump announced tariffs on steel and aluminium from Canada, which would raise to 50% starting Wednesday, up from 25% amid growing concerns about his trade policies. In other news, the Trump administration reported that Ukraine had agreed to a 30-day ceasefire, with the White House resuming military support and intelligence sharing. Investors are now focusing on key economic reports this week, with Wednesday's CPI and Thursday's PPI still remaining at large, and see what unfolds from there. As I mentioned, as the support level from the 60-day simple moving average holds, the technicals are a little bit mixed. Keep an eye on this level, as a break would open way towards 62.25 or maybe down to 61.60, where I've outlined here. But given the fact that we've seen strong demand recently and also the break from the bullish candle above that 60-day moving average, I feel there is a potential rise, still keeping in faith the target of 64 to 65 cents. Well, the upside call is extended from the region of 107 to 108 and now challenges 109, where previously the market found heavy supply. Keep an eye on this level because we are overbought, and anywhere above 109 could see a significant downturn and look back towards the region of 108.2025. Dollar yen finding a little bit of bullishness after posting an outside range day and rejecting the lows seen around 146.5. Nevertheless, as the recoveries have failed and continuously seems to weigh on this downtrend, let's see if the market finds resistance around the level at 148.15 to 148.65, and if so, supply could send the market lower and the call still holding to this downside objective of 144.40 to 144.80. Turning to the sterling, the market is still somewhat positive as it holds above 129. And with my target reached from the inverse head and shoulders, I still remain neutral and see what the outcome comes in, just in case we see a break that holds this level support around 128.20. If so, could see a move back to this trend line around the region of 126.70. Wrapping up with commodities, well, the market still remains somewhat positive when it comes to gold, since breaking above 2,900, looks towards the region of 2,950, with any weakness still finding support on the broader scale of 2,850. And wrapping up with oil, a little bit of bullishness coming back into play here, and still respecting the level around 64.80. I like the way these technicals are picked up, so let's see if we can get a break above the level of 66.60. That could see a rally on to 68.5. Well, that's about it. Thank you for joining me, and as always, look out for the interest rate report. Hope you enjoyed a great start to the day.